So there you go. The spread just went to 11 pips at 5 p.m. on this broker. So this is a Uniglobe broker. That's why you want to go flat on a lot of brokers right before the end of the just before 5 p.m. or just before the news. If news is about to come out and you're up on a trade because you traded to drift up into the news or drift down into the news, if you watch the stock market, you watch the currencies just before cash opens, you'll see a drift into a certain price zone, or they just keep on getting a wedge. The market just keeps on simmering down, and then there's an explosion breakout. So the cause for the effect is you have this cause of this sideways congestion, and then there's a breakout. But it could break out and come flying back, right? Look at the spread here. We just went. A lot of this price is created by the spread, so the ask never got tight enough to fill that, so that's kind of not a true representation of price. So every time you look at the bid, the prices here, you're looking at bid, which is kind of deceiving if you're thinking about back testing visually a buy stop at the end of the day here or a sell stop. You would definitely have been trapped on the sell stop, but we don't know if the buy stop would have filled here. So if you're looking at the chart trying to build a trade plan from the half-hour chart. So here's the obvious, there's at least one chance to get on the daily trend. If the market's moving down all day long, there's a chance to get on that. Okay, 2 minutes before 5 after. So we're waiting 2 minutes to update the 5-minute chart. The spread's 2.5 pips right now. So we're waiting for the spreads to tighten up. And I got other brokers where I can see what they're doing. So this is where you get this arbitrage right here at 5 p.m. Get a couple brokers up. There's so many ways to make money in this thing. You don't have to be trading a particular time frame. You could trade anything from a 40-second trade to a 40-minute trade to a 40-hour trade. It's all completely different worlds. If the market moves, if you can predict the market to move 10 pips with a 5-pip stop, you just doubled your money, right? But to really make money, you'd have to trade pretty big to make big money. So how much would you donate to one trade plan as far as risk percentage? And you can certainly make a lot of money from a very low risk trade, but how often does that appear on your screen? And are your orders set to capture that in advance for that high probability first bounce? But the market can keep going in the other direction. So you could think, hey, this is a great bounce trade, and then the market bounces like a dead cat and then just keeps shearing down in a buy scenario. Same thing in up scenario. Hey, sellers should come in up here, and they don't. Uh-oh. And when it goes sideways too long, and then, hey, money management comes in, people start to think about their risk because it's been going sideways too long. Plus, they have margin that's locked up in a trade where you have to think about if you have really bad leverage and your broker's making you donate a bunch of money to a position. To me, you could free that margin up. If you get stopped out of that trade, you've just freed up margin to go trade something else. So if you trade high leverage, the account behaves differently. Because if you're more clever with high leverage, you can have this always there situation where you don't feel like you may be risking dollars, but you're not locking up equity to hold a position of any size. Because even if you're scalping, you're holding for 5 minutes. So if I bought right here on a buy stop, which I don't think it would have got filled, see, because if you said I put a buy limit here, they never filled you because the spread's too fucking wide. That's 5-pip grid. And now the spread is 3.5 right now. This is what the guppy looks like if you're trying to scalp it. So you have to be more clever and put your buy limits down here. So this is my buy limit's coming inside the spread right now because of the time of day it is now. in the olden days, you couldn't do this trade. Broker would not accept that. But I'm buying inside the spread. And that's a buy limit. Imagine a buy stop. How put a buy stop in? Look at this price. Are you kidding me, right? But look at this one. Right in the middle, right? If I keep nailing this one key, this is a 15, I could set this to 15 minutes and just sit here and nail this. And I'm putting in a giant slam to hell order that lasts for an hour. So look at this, in the last video, this one. Now this is the mother of all scripts. If you add about 40 more tickets onto that and take it down to here and let it last all day long, just imagine that trade, right? Anybody doing that trade? Now you could do that across 3 pairs, maybe 2 pairs. But geez, that's not even going to on some brokers that'll crash the platform because you're asking them. Now look at that. The ask is not changing, but the bid is. So the ask is frozen right now. A huge possible retrace coming on the euro up here. This is the 4-hour. You're trapped below the floor here. This is trap entry. We've grabbed everybody's scalp from here. This blowout bottom, and if it goes sideways too long, it probably just continue going. And whatever the thing about a triangle and a flag or whatever have you, a doji, is that it's the breath, it's the pause, and then you know what? If it doesn't go this way, it's going that way. But this is the chance to put in tighter stops. You hit a button, it's a 50K, and it's literally puts in 50K, one button push. So maybe it's 25 buy stops, 25 sell stops. It's bracketed the market. You've got an incremental exit to 25 pips. Every 2.5 pips, you're taking a 1K off the table. It's like a butterfly. It's like when people trade options, they have a butterfly, they have a straddle. Now, how long does those buy and sell stops last? Do they last 8 hours? Do they last 4 hours? Do they last 2 hours? Well, holy shit. As soon as you change that number, if one button is a 15-minute doji, and the other one's a 30-minute and a 1 hour and a 3 hour, and they'll have slightly different entries, and you hit those 3 buttons every 4 hours. And you know the metrics, you know them numbers, right? The profit ratios and that. Who's not fucking making money? You have 8-to-1 ratios. Sure, if both legs fill, you only make 4-to-1. Or worst case scenario, you lose an X dollar amount flat. The worst, like risk of ruin per script, right? This is not risk of ruin per trading account. So you diversified the tree to the point where you're literally not even trading, right? You just have pendings, and you're kind of like, I'll buy one at the market for the old days when I thought, hey, it's going up here. But it's going to retest. So if you know the retest is like 90% probability of a retest, or the market actually going somewhere. So wherever it goes, if it goes up, it goes down. Now, like I said, I'm going to build this mirrored image here. Here's my sell limits. Now, if these are 8 hours, it's completely different. They're 15 minutes. So you have these plunge orders above and below. Plus, you're aware of the half-hour charts. You come back here, or on the 1 hour. So here's the top bottom on the half hour. So you have to find it on the time frame it's showing up on. Here's a top. Becomes a bottom, but not perfectly. But if you take the wick top and treat this, you have a perfect top bottom, but you wouldn't have filled because the spread was too wide. But the capture zone is in here. This is a 4-pip window. You load in about $1 million here, okay? And you just, it's a break-even script. So here's your stop, right? You load the wagon on the top, become a bottom. You load as it comes back in on the half hour. I mean, you bought because it literally went down. That's your signal. Buy all pullbacks. You bought here, and you bought here. You did not buy anything else. You're making money. If you bought here with a stop here, and then you bought this down, every time it's down, oversold, you buy. Okay, you're building a position. And you're dumping along the way. But I mean, I'm talking about you're buying half a pip apart, one case. Yeah, you're in 25K. You just meant ching, 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 ching. It goes sideways. Put in the doji scripts. Goes sideways for 5 pips. Put on a buy stop, sell stop. You only filled on the buy side. Here, ultimate entry. Coming into Asia. Coming into whatever the fuck. This is the 5 p.m. rollover. Right, there's the rollover 5. I don't know why people... I thought this ICT guy just talked to the inside... I got the inside scoop on ACT. $150 to tell you nothing, and he doesn't even trade breakouts. He waits for the London Open. Like that's where the guys with the big cigars come out. So I don't have any problem with trading a trap trade in any time frame. If the broker's going to let me trade inside the spread, I don't care what his fucking spread is right now. I got a pending that is sitting here because the spread may be this, but the broker's letting... So all these scripts are broker dependent. If your broker sucks, like the old ones used to, hey, you got to put up... When I started trading, you had to put a buy stop here and a buy limit here. You could not trade near the market unless you pulled the trigger at the market. So I had to trade the market. So that's where you had to trade. You don't have to trade the market anymore. It's a modern world. You step back, right? You don't have to go to the party. You can just, videotape it. So it's not the old days, and certainly you can stretch out and just throw in outrageous trade plans. You don't have to be there for the drama, although it's fun, right? No doubt. Everybody wants to be a sniper and think they killed their dinner with one bullet, but one shot, right? Deer hunter. Of course, he ended up aiming at his head later on in the Deer Hunter movie, but it was the idea that you take this one arrow and you just nail it, But that setup, you have to be very, waiting for that to happen. So maybe that's happening tonight in the euro. Maybe the euro's in an uptrend. Maybe they just stop hunted every motherfucker on the daily here and took out the low from Thursday. So we up on this trade right now. If you bought the lows all the way down and you had a master stop, obviously you made money, right? And if you bought really heavy, like you had bigger tickets closer to the master stop, right? So it's getting in a spectrum where it's just faded in, right? Amazing trade, right? You're actually out of the trade right now. If your exit was the wick from Thursday, and that's that floor here with the 4-hour floor, if you look back up in here. So this kind of drift up, if you size this right and this is your exit, you got to get out here on something, and that you got to get out as you come slamming back up into this floor. Then what do you think the chances are they retest? So you come back in with another bank of orders. But that's the thing, it's a continuous drama like that, unfortunately. Because the violent moves, if you don't adjust your size, this would blow up the account, whereas this trade here would make perfect sense to trade really big for that. Come in a 5 pip grid here, you're placing 5 pip alternate buy sell, buy sell, buy sell. So it's very much like a pickle, caught between bases when you're playing baseball, right? You run this base, that base, or people try to steal base, right? And then they finally steal it, right? This game goes on, and I would say that it gets people's hopes up if they're bullish when they see it go, and they're like, oh yeah, we're going to break out. Oh, no. Oh, we're going to break out. No. Oh, we're going to. So it's very disturbing. Unless you got a trade plan for it. If you're a trend trader, you're just like, oh, I'm used to this amount of punishment. Yeah, hit me again. And you just endure it. And swing trader have to endure that the market is not going to retrace. It's just going to keep tanking. It is a trend, right? So it's either like the trend traders either going, yep, see what I told you, see, it just keeps going down. And the range traders say, well, you know what? I made money during the flag. So if you traded the flag, you don't give a fuck where the market's going. But if you traded the flag and you gave a fuck where the market was going, you could trade the flag and then come in with your other orders and go, okay, we go into trend mode. So you go into trend mode, you go out of trend mode. So you're trading modes. You trade phases. So if you chop scripts are different than trend scripts. Trend scripts have very greedy targets, very tight stops. You get in during dojis, you get in during flags, you get in during pullbacks into tops become bottoms. It's the same thing with moving average. If you get the moving average just right, I could actually put a 5-period moving average on here and say, you know what? Take every trade off the 5-period. You're a high frequency trader now. Like, I'm not saying moving averages don't work, but when you go to a 200 SMA, you got to put that on 1 minute chart. You can't put a 200 SMA on the monthly and go, okay, guys, what do you think the trade is? I mean, seriously, you're so far away from reality at that point. So a 3-period moving average, 5-period moving average, yeah, you know what? 5-period moving average, linear weighted, if you trade that with a rule set, hey, every time it touches the moving average and the moving average is tilted down, nail it. But you'd have to be aware of the bigger picture. So it's funny, you would build a system and then you would have to ignore it. You'd say, oh yeah, I know what it's saying, but I know why it's misreading, right? Like if you're driving your car and it's cold in the car, you're like, well, maybe because it's temperature outside, the car just can't compete with it, right? And so, and then you have to, when the market just goes violent, you just say, why do we even have this moving average up here if I'm going to keep discounting it? Like, do you trust your fibs? Do you trust your fucking moving average, right? You can't trust any of that shit, because what you can trust is what you see. The other stuff are filters. Nobody wants to get a piece of music and have to finish it where it's already destroyed. So you want the raw data. You just need raw data. And from several broker sources, and maybe even you go to the internet and you watch you just fucking open a demo at some supposedly high-end broker. I should be running it right here, this dust copy, Switzerland. Who's ever the high-end broker, open a demo there. And run the tick chart. And look at your other brokers and say, oh yeah, I can fucking arbitrage this bucket shop and make money. The idea that bucket shop's a bad thing, that's the good thing about capitalism, is people go out of business, right? That's the point. It's competition. And I guess it's who got the sizing right, who for the situation, the venue right. You can't show up with you can't show up at some big stadium with a small amount of wattage, but you also don't want to show up in a small bar and play so fucking loud that people can't think straight. So even in that world, size matters. All that would matter. But for some reason, in the glorious, glamorous world of trading, that doesn't matter. What matters is that market geometry, right? But without getting the size right and really maximizing the horsepower and the torque, it's about torque. Leverage is torque. Horsepower is money. So you have to have these two components, right? And there is a sweet spot. There's where you have the most amount of horsepower is peaking, and maybe your torque is, hopefully the torque, I guess that's a lower, because you get to the horsepower, once you run out of torque, you're kind of fucked, right? This is the end of once the thing, because the torque is what is going to get you that scalp. You've got leverage on it, you burst out, and the rest of it just floats. Because inevitably, if it's really a trend, there's going to be bursts, it's going to pull back, and if you're slightly in, but you're taking chunks out on scalps, that's the Goldilocks trade system. And you could be hedging. Go the other way. Say, you know what, it's sideways, and you know what, I could scalp this for 5 pips. I think we're going to drop 5 or 8 pips right now. I put in that script. Or I sell at the market, or I don't touch my longs, or I cash out, I go completely flat. Now that can be horrifying if you're a trend trader. Because you need to be in something for the punishment if you're a trend trader. So this balance point between scalping and trend trading, a little easier with one currency pair, because once you can see what you need to do every fucking minute. This half-hour chart, at this point you're like, yeah, okay, if it pulls back, I would buy. So I say, okay, for the next hour, I'll buy here, and I'll put in this monster thing. And if that doesn't happen, at the end of the half hour, at the bottom of the hour, I would just buy at the market. no questions asked, and put tight limits in. So I'd load up pretty hard if it was down. This would be a buy signal right here. If this closes down, I just buy. Now, I've still got all those limits down there, so maybe I buy a very small percentage of the account because I know inevitably it could pull back more. There's nothing saying just because it's down, it won't be down the next half hour. So I need enough dry powder to pull the trigger again. And maybe this whole thing doesn't work out. And I'll start putting sell limits above for a possible burst up. So you're anticipating a burst in either direction. And I think that's the balanced approach, right? Is say, well, the best way to do is to, have a stable situation. But a tripod is better than 4 because 4 you could have a leg that's too long or short, and now the thing wobbles. It's better to have a tripod trade where you have market, stop, limit. You really are looking to be a seller. You're looking for the sellers to make you money on your buy limits, and your buy at the markets or you sell at the markets. You're saying, okay, I have a rhythm. There's a cadence to the market, and so it has a gate, right? So the gate is how many pips deep? How wide does this thing walk? And on the clock, so we're waiting. Bottom of the hour here, we get a big sell-off here, and we could get a nice retest, maybe pounding here, but it's going to be interesting to see the next 4 hours. But I suspect, unfortunately, you're going to have to load up really hard when you need to and be very light and maybe flat and just waiting for something to happen. But you can't always have everything sitting in a Limitville because you can't be afraid to trade if you can see the half-hour chart. So you can kind of figure that buying about maybe 5 pips deep here, 5 to 20 pips deep with $1 million position for the next 15 minutes, right? That's not a bad idea. And maybe a smaller position that lasts a half hour and a very small position that lasts an hour and a very, very small positions scattered on the 4 hour. Now, that's easier said than done, as they say, and you would write all those scripts and you would take another broker and you'd load them on there and you would run that system. And maybe run it across a bunch of currency pairs that you can see that, hey, this thing would be a good fit because it's 80 pips deep would fit great on the guppy. 80 pips deep on dollar Swiss or something that's kind of dead in the water right now. Of course, that could be a good trade anyways because, if it's dead in the water, it may burst and go and hit that order bank. But nobody's going to place that manually, I don't think. I guess if you're really a trooper, you're manually placing all these, but I'm talking about double-clicking an array of 100 orders on one button, that you only open that platform every, day, at the end of the day. End of the day trading, good old school trading. And, you just have this elaborate pending matrix out there, and market goes slashing through it, and you could know the total risk right there. You could write it down. Total blowout, risk of ruin per script, and write that down. I mean, some people are writing shit down like you can't believe. I can't do it myself because I'm just gonna bitch on audio, but you could write arrays that are just mind-blowing and just launch them on fucking open demos, 10 brokers, and run that shit. You'd be surprised. You look at the results and say, what the fuck was I thinking? I was like going to try to predict the market. Well, you would be predicting the market in a way. You'd say, yeah, I think if it goes down, I want to buy it. But, I mean, how many scalps are built into that thing, or is it just a goober trade like you see this ICT guy came back? I'll put a link to the ICT guy. You got to see this. No comments disabled. And To top it off, he's got this music playing in the background to like psychologically calm me into thinking it's really cool. And then he's got this one trade he did where he bought the new low dead on with just one ticket. And you know, he's all excited about that. But I say, no, you've got to pepper your screen with a bunch of orders. This way you just don't care. You have a cushion. Like, this is the idea of having a cushion on your couch. So he's sitting in this rigid chair, and I'm on the waterbed couch. I'm on my futon with neoprene ragdolls on it. But patience in the end would be the key here, and not over trading would be the other key. I would say the biggest danger in this many orders is you could overtrade it, right? This is like having just a pile of money. You might actually spend more than you have. Like people that won the lottery, next thing you know, you're filing a bankruptcy, and people say, how'd you manage that? And they're like, I just maybe got carried away. Maybe I'm impulsive. Could be maybe just, you know. The half-hour chart, though. If you could have swung trade this, you know, this is 10 pips to risk 5 all day long here, depending on how you placed your order. Risk 8 to make 12. You got to think in totally every ticket's different. It's a lot of work, but you know, as long as you have these 3 styles, where you know what you should do, if you feel like you're chasing it, but you're like, you know what, I'm barely getting in. Besides, I got so many orders beneath me that if I do chase, I know what mistakes I make. Say you're always too early to a trade. You put your orders really deep and just say, you know what, I know what I'm going to do if it goes way up there. You've already got it set in your mind's eye that that's the supposed kill zone people talk about. Well, how could that kill zone be? I think more than a bunch of mines. So I'm just setting mines out there. The method's pretty stupid. It's very crude, but it's actually unfair, and people don't kind of like that approach. People like to have skin in the game, or they want to feel maybe moral, ethical, because, well, what I'm doing is what I was told, and this is the thing, and I'm following my system, and I'm waiting for a certain thing. But, you know, as you're getting hit by rain pellets and they're telling you the weather's going to be nice, you're like, maybe I should just go with what's happening. Well, how do I deal with the fluctuations that I see in the market? I say get in before it, you know. The setup has already happened. The setup is like 30 bars ago, or the established structure. We already know the structure here. Now it's just, how's it going to get there? So here I'm going to buy at the market, right? Because this half hour, it's down. So you buy at the market, and then I would buy in limits. And actually, I'm still inside the spread. With the spread's 3.5 pips. It's just went to 4 pips. I put a limit inside. And I think actually when this goes up, it'll fill it as if it's a buy stop, I think. The ask is not changed here. It's frozen. Okay, here's the big deal. Half hour in. So I'm buying because it's down in the half hour, and I have buy limits below. So I'm going to buy this small ATR, starting the candle, small ATR. I'll put buy stops in. I'm going to put, these will be terrible orders. Now the spread just tightened up a little bit there. I'm going to buy at the market. If the spread gets down to about 1.5 pips here, that's pretty good for this broker. So now I'll just put in just an insane amount of buy limits, and I'm going to go in with buy stops. These are going to be terrible, you know, kind of possible trap trades. So everything I wrote in the other video. So if I'll create a mirrored image of this thing and I'll post it. You have to come back later after you write all the buy sides. You come back and you edit all the cells to make a symmetrical trading system. You always know which button to hit. It's mechanical trading, right? So you always know, hey, this, I got to hit this now because I see that. Here's the top bottom fill. Like I said, I don't know if you would have got filled here. The broker's spreads never really got, the ask never came down. That white line has to come down to here for you to get in on the buy limits. And I still got some pending buy limits. Right? Right here, buy at the market. As long as it's sitting right at that top bottom, you'd be building your position right now. So I'm shooting a BB gun. I'm not buying a standard lot there. I've seen people do it. That scares shit out of me. You're down like what, $30 with this broker, and so I've got terrible orders sitting above me, buy stops, but they scalp out right into this, pretty much. I already know my targets are set 8 and 10 pips there. That's the scalp portion. If we burst to there, then we come back in with the buy limits because they're gonna smash it. It's gonna be a rangy ride. Trends do not move unless it's a burst run fill of a big vacuum. Yeah, goes piling up, right? In 1 hour you could go screaming up 30 pips, but then it's over. Right? It's gonna have to, if it takes a breath, this is where people are either gonna go the other way or they're going to go with the continuation trade. And this is where you could whip out a doji script, or you're going to hit C5 and A5. That would put you in a symmetrical hedge on stop entry. 1 pip away from current price. However you set that. Or it could be, these could be all be market orders, for God's sakes, right? Just to be careful. You know you're getting in. This is not confirmation on entry. You could set this to get in, say 3 pips away, 2.5 pips away, 2 pips, 1.5 pips away. Right there, you've changed everything in a way. Right? Even that subtle difference makes a difference. Because you will not be exposed unless the market really takes off for 3 pips. But then the problem there is that could be a trap trade. So do you really want an 8-hour buy stop 3 pips above? Well, maybe you do, because if the market is really in a strong trend and it really goes doji, the more doji it goes on the 4-hour, the more you would run that. But I'd almost rather write a script called doji and double click that, because if these are really buy stops and sell stops, and these are set in your mind to be a trend trade, and this you always know is the market, or these are all set to market orders. Now, the way you title it and the way everything's set up. And if you're a pending order trader and you put your orders in for all day long or 12 hours because you don't want to keep coming back and doing the same stupid thing when you know they're going to fill. But the only problem there is that if you put a sell limit in this doji here, right here, you'd have to keep putting that order back in you missed one. If you got in this one, you missed 2, 3, 4. You missed almost 3 other trades. You could have done the same trade twice more and made the same amount of money on this constant back and forth drama. So here's the window. It closes. This is a big floor. You're building the floor like that. It's a dense pack there. That floor is not just one price. Now, if we can stabilize here, I'm done buying for the next half hour, so I would just wait for my limits to fill and my stops to fill. Now I just wait. I don't touch it here and come back to it. It looks like we're going to finally make a possible rally. I'm done buying on here. And the market, the broker is just kind of frozen here. I don't hear a disconnect bell, but here we go. We just moved. So I'm looking for an attempt to come in here and look at the sell limits based on this bottom pivot. Almost dead on for that. But we're coming up into this controversial floor. Is this really a breakout? Are we really going to hell? And if you go to the 4-hour charts, you know, you're attempting to break this trend line on the 4-hour. We're going to cut through that. Here's the bottom on the 4-hour. Pretty obvious. Fell out of bed. The daily is, now here's where it's scary. Look at the weekly. And look at this hole beneath you. But is this nothing more than a stop hunt for the people that have those robots that run a trailing stop and an up move? This, if the euro's going up on the weekly, and it just came back here for 5 pips or 10 pips and trounced you, you're pretty pissed off, you know. So that's maximum zoom in. So this window right here, the more orders you put on here, the harder it is to move the graphics around. This is about a 15 pip window, 12 to 15 pip window of buy on the weekly. What if it closes here at the end of the week? You'll be up on that trade if it closed here. And where does that sit in the world of the daily? That is just above this floor on the daily. So the trap on the daily is this wick. So if you had bought that, everything below that wick, you're up in the trade right now. You've scalped out, and it was a good, easy scalp, right? You know, it plays itself out, or it doesn't, right? The next place to scalp is to put buy limits starting here, but we never made it down there, and I'm sure that this is probably some Fibonacci ratio from here to here, right? Or a third, just to be crude. You pick the fib, right? Is it 5? You want to do 10% grids? You want is it going? Do you want logarithmic, right? Do you want to buy there and then have a buy limit here? So you're long now, and you put buy limits in streaming down, and then we get closer together and closer together, and buy limits here, of course, because this is a new low, right? And then maybe you go flat. Maybe you just master stoppage. You're buying every pullback, just like up here. The ultimate trade is fake breakout for 10 pips on the daily, sell on limits. And one day, you can make all those pips. These don't come very often, but when they come, you got to trade that. So here's the daily structure. You scalped out. You made, say, $1,500 here. And now you're waiting to get refilled on all the limits. You do the same trade again. And this one goes so deep. This is the 40 pips deep here. So every hour it's going down, you could be putting in an 8-in order. Every hour it comes down, an 8-hour order comes in, right? And the market's moving down so hard that you're coming in front with this massive order bank. Now it's just about the patience of watching this thing happen. Well, catching this falling knife in slow motion, basically. And when that thing retraces and you don't touch any of those tickets, and you're like, oh yeah. Because at the very bottom you got scalps built in. You just build them in. And you could live off some of these scripts if you place some when the true range of the last bar matches your script depth. You would know, okay, I see an 80 pip bar, let's throw in orders 80 to 100, 10 to 80 pips deep. Now, you gotta do it, and if it's gonna be a 15-minute script it's gonna buy a standard lot on one button push, all 1Ks, but it's all built in. You don't have to worry about closing profits, because if the market spikes down 25 pips in an hour and fills this thing, inside of that you're cashing out of stuff. So you're maybe out of half of the thing, and maybe you're, when you go to take all profits, you only got 50K left on the table, even, right? Because everything, a lot of this stuff would be pre-programmed, because you know with a master stop, say, or a soft stop, in this scenario, right, where you just have this risk of ruin on this one monster spike arrestor, and that's what you're really doing. You're writing a script that buys at the top here every 5 pips. It buys heavier down here, and your stop is like this. So here's your stop. You buy all the way in. Your stop out range is maybe about here. And you would layer another one in. That's going to buy very dense here, and it's going to risk more than it makes. And because as you come down here, your probability of retracement in 12 hours or 1 day. Now, if you just double click that every day across 5 pairs, you really don't care. You know, when you see the window, you already can't place it. Now, that would, the most automated thing you possibly do is double click or drag and drop one of these arrays, as opposed to hand placing precision tickets at the very top of the daily here in this 10 pip window. You could do that too, right? Or you could just be a pig and press sell clusters up there. Just hit a button and it just throws a bank up there. Either way, right? Okay, so we're finally making a move here on the euro. So I'm looking to pull about 50 pips out of this thing. I'll come flying back into the floor at 11.65. So basically, I would like it to go higher, of course, right? But my initial targets would be like that. Now here, it's all preset. Most of the stuff is going to get out. I guess I could put my buy stops in now, and I'll just do the goober entry. Okay. And so pretty much just looking to make 10 pips here. Go to the 30-minute chart, which was our last buy at the market. It was down 30, so we had a buy signal. It was oversold. There, we bought. And now we're just going to wait on it. Yellow is entry, and exit's black. Sorry, no, I mean, sorry, the blue is my buy limits. The yellow is the where I predefined my buy limit bank, where it just comes in, and so you can get very complicated in here. You know, it's really what you're comfortable with, because the idea of having all those orders beneath you and not knowing the risk of ruin per script may be disturbing. So instead of blowing up the account, you could do the math. But either way, I'm finding it to be a little bit easier than having to analyze the market. I'd just rather analyze the trade plan. Say, does that trade plan make sense? And you can make insane ratios. There's no doubt. I don't have a problem. Like, the whole point of this is, somebody said something about that I didn't believe in risking a small risk to make big rewards. I'm saying I do believe in that, and I can show you in the chart to do that, but those trades don't come up very often. Most of it is going to be a range trade. Now, you could do the same ratio. You could put a 5 pip stop to make 15 pips, but you know, you just couldn't load. You'd have to do incremental. You have to have some kind of great design. Like I said, like a tripod, something that can withstand a robust script. That maybe it does stop you out, but maybe that's going to be a problem psychologically, because you want to swing trade it, and to swing trade it on a bunch of small tickets, instead of getting stopped out, you're going to be in a drawdown. but you're going to save on the spread and the commissions, because every time they take you out because your stop's too tight, now you got to get the fuck back in, because you're like, so if you're a swing trader in denial, you have to, like a trend trader in denial. If you have to be a trend trader, you need to be in a drawdown. Otherwise, you got to keep buying back the fuck. So if you're scalping or even swing trading a 5-minute chart, you're really a scalper, right? You're swing trading, but you're getting the hell out. You're going flat, and you're trading big, and that amount of weight. So if you go back to the torque and horsepower, how much weight are you dragging? How big is this thing? So you're going to need the torque to drag a bunch of big tickets to scalp that. But the horsepower, or the kind of the endurance level of the engine, not to overheat and ride the trend, and not to get loaded up with stuff that you have to dump. You could trade around. You could trade around a say you're long, and you could scalp in counter trend, scalp around that position. But trend traders that say they're going to buy and hold have to endure these fluctuations, and you have to coexist with the pullbacks there. And are you going to use those to add positions, or are you going flat and trading the trend in a sense that you're skipping a stone on the water? You're only taking the price pulses that are in the direction of trend. You're scalping and dumping, and you could say, well, I'm a trend trader, yeah, because I only trade in the direction of the trend. Or are you a trend trader that's holding something, going, oh yeah, we're just going to wait for my lofty target. So those two, here we go. So I'm getting a little breakout here on this bucket shop. We're getting to the top of the hour. Top of the hour is coming, frantic, kind of, this will be the do or die moment. And if it's down, I'll give you getting filled on limits if it comes crushing down. So now I'm going to put in the same script. Now look, it came in at a different price because the market's moved. And this lasts an hour. So if this lasted, if I wrote a slightly different script and it lasted 2 hours, and I just keep doing that trade plan, right? This is where the market's going to prove you right. This is where the market's going to decide how big you're going to get in, because you laid a trap of X, and that's when it's just amazing, right? You're not even in the market yet. Market comes in and fills those tickets and sweeps back. Or you could actually sell into it. Like you could have sell stops right now stacking up. So no matter what happens, if it goes up or down, so you're in dual strategies at the same time. And that's psychologically difficult if you don't like being long in a hedge, because a hedge says, I don't know where the fuck it's going, and I'm actually paying for the hedge. You're paying for the insurance with these extra orders to go the other way should there be a momentary lapse of reason where people can't see what you see. And you have this vision of, oh, it's going to do this, and then for some reason, just before it does that, there is a complete reconciling of all tickets. Everybody jumps, or maybe there's news coming out. It looks very frantic right now, like there is news coming out. So, another thing is when I trade on my real account, it might distort the audio on the recording, because MetaTrader, I don't know how to get rid of the sound at door slam. That's pretty hilarious. But okay, so we're just waiting for the top of the hour here. This is a 5-minute cycle window, and if we get a follow through up, and we'll scalp out and we'll take a chunk off the table here. But having the buy and sell stops, buy and sell limits, you could trade pure stops if you wanted. If you have a completely mirrored system, but you have to be there for that trade. You got to babysit for stops, I think. To really do it right, market's dropping, you're putting buy stops in, it's going up, you're putting sell stops in, anticipating the vacuum fill. So top of the hour, we'll see where we're at right now. Trying to get this thing up to $50,000 in the next 40 milliseconds. 2 minutes before the top of the hour, and we're long on these buy stops that supposedly you can't make any money from, according to Adolf Hitler. And I don't know where this guy's trading at, where he's paying 1.5 pip spread. I mean, what a fucking moron. Of course, what do you expect from Adolf Hitler? So these are going to take 8 pips off the table. So this one is a very big ticket. Now, I could have this buy at the market. It doesn't have to buy on a stop necessarily. But just to show that this is confirmation on a order flow thing, I have 4 pip stop, which is in essence a 4.5 pip stop if your spread is half a pip. And I'm looking to make the 8 pips, which is really only going to be 7 or 6.5. So risking that to make 6. And it's a scalp, right? You want to put in a wider stop. You have a bad. If your broker has a 3 pip spread, you should be able to make money. Just having a spread is no excuse for not knowing how to trade. You would just put a buy limit in. So you would get a better fill. This is how you win the battle of trading, is you dare to put a limit down here and get filled at a better price than put a buy stop here 1 pip above and chase it. But what I'm showing here is that for people that want to trade on stops and limits and at the market, all that stuff, right? Because sometimes you're not chasing when the market explodes. If the market goes zooming up right now, that even those bad fills would make money. They just add to your overall margin usage. So here comes the top of the hour. If we get this thing to pop up, it would scalp out if it can just go up 8 pips. Otherwise, it's going to smash back and we'll buy in limits. I just put another 1 hour monster drop in here. The mother of all drops. Double clicks. Okay, sorry Adolf, but I made $3,000 on those scripts. And we made it back to the floor and then some. We overshot the runway by 10 pips, so